It's what happens every fucking time we monopolize money. We debase it to the point of meaninglessness. So in that situation, people, being purposeful actors, monetize other things. They look for other things to store value in. Anything that cannot be printed or counterfeited is relatively a superior store of value to money that's being debased ad infinitum. So yes, I think the reason we have all this monetary premium in equities and commodities and real estate is because we don't have an adequate store of value mechanism in the money. But as we say, Bitcoin fixes this.
And I think we should address, some of these guys are making, like, humorous comments. I bought it 68,000. Yeah. Okay. So here's the thing, guys. Have a long-term horizon. We don't know what the Bitcoin price is going to do short-term. This is just my opinion. It goes up and down. It's very volatile. Historically, it's gone on a 4-year cycle. And when it's going parabolic and the price is going up, everybody FOMOs in. They buy Bitcoin. And then some of them stick around, but some of them have weak hands and sell it when it goes significantly lower, like some people are selling right now. But I don't think that's the way to look at this thing. I think you look at this thing as it's nascent. It has a small market cap, so it can be very volatile. As a bunch of money comes in, it can go up fast. As money leaves it for whatever reason, it can go down fast. But it has been growing year over year consistently for 14 years now. How do you see the growth of Bitcoin? Let's not even talk about the price, but how do you see the growth of the Bitcoin network, the network effect? Because the way I see it, that's what this is. If somebody's investing in Bitcoin, they're investing in the network effect of Bitcoin, the network, and whether or not it's going to continue to grow and continue to get stronger. So first, comment on, is that a good way to look at it? And B, do you think that it is continuing to grow, even though we're in a down market right now?
Well, it's definitely still growing. And there's so many ways to approach this. First of all, if you're concerned about the Bitcoin price, like if you feel emotional about it or harmed, then you're overinvested. You either have not created an adequate level of conviction, which I always recommend that people study the world, develop a worldview, and then construct a portfolio that reflects your worldview. If you don't know and understand what you own, you're going to get shaken out of your position, either to the upside or the downside. If it doubles in price, you're going to sell it and think you're a genius because you think dollars rule the world. If it declines by 50%, you're going to get shaken out of your position and sell it emotionally. You're thinking in dollars, right? We can't, well, there's this strange aspect to money. I describe money as it's like a hybrid technology and psychotechnology. So in one sense, it's tangible, right? Gold is a physical metal and we can touch it and whatnot. You could call it a technology in that sense, that it's something we handle. But the real value of gold as money is that it actually changes the way we think, the way we cognitively fit ourselves to the world. That's pricing. Well, it used to be dollars were redeemable for gold. So thinking in terms of dollars was kind of a useful mechanism for performing economic calculation. But when you break that and dollars are no longer redeemable for gold, you're now thinking in a very a way that's not going to hold a lot of weight over time. Like, for instance, the price of steak today and the price of steak 2.5 years ago, they're not even fucking comparable, right? The price of steak has gone up 50% in 2.5 years. So if I'm trying to perform any type of economic planning over more than a 3-year horizon, well, the dollar's a really terrible way to look at it. So I don't want to dwell on this point, but just to know that prices are not universally denominated in dollars. You can denominate prices in anything you want. You can, which is another way of saying you can trade anything in a ratio of anything else. Now, if Bitcoin price volatility denominated in US dollars is bothering you, then you are overinvested. Your position is too high. Or your conviction is too low.
I'm irresponsibly long, but it still doesn't bother me. I don't care. I look at a bargain right now. I'm buying more Bitcoin, right? And so I just have the belief that the network can't be stopped, that it's going to keep growing, and that the game theory of it is more and more people are going to want to get involved in it.
Mhm.
That's my opinion. Now, I may end up being wrong, in which case I'll lose whatever time, effort, and resources I've put into Bitcoin, right? But time is going to tell that tale. So the way I explain to people, I say, listen, once you've bought the Bitcoin and you've put it in cold storage, just look at your total amount of Bitcoin that you have. Don't worry about what it's trading at the fiat price today. Look at your total and don't even remember what you paid for it. Don't care. Okay, I bought a Bitcoin 2 or 3 years ago. Okay, I have a Bitcoin. You don't even need to remember what you paid for it. The fact is you've got it. And then just keep stacking more and more if you believe that this thing is not going to be stopped. If you believe it's going to survive, and if you believe it's going to be the dominant currency, I think it's going to end up being a currency, money, whatever term you want to use, the dominant money, I think that's probably a better word to use, for the globe, for this connected internet economy. If it's the money layer of the internet, then that's huge.
Yeah.
So blow holes in what I just said.
Well, no, look, you have conviction, right? You have conviction based on your own research or whatever you've done. I don't know. You consume podcasts, you read, you think, right? You're an individual. You've got critical thinking. You've clearly built a wall of conviction around this asset for you, right? In your circumstances, your age, your demographic, et cetera. And your conviction consists of, correct me where I'm wrong here, you can't stop it. No one knows how to turn it off. People will keep printing money as they always have, right? Anyone who has the power to print money always engages in the printing of money. It's just a very efficient way to steal. And then the third one is that people are self-interested, right? The people that are being stolen from.
Key. Well, that's the key. That's the game theory. That's the game theory, right?
The people that are printing money will continue to want to steal. So if you just have those three things suspended into your worldview, that alone, in my mind, is adequate conviction to hold the asset. But those 3 points are packed with this is not something I can just tell you once and you've got it, right? You can't stop it. Right. How many hours did you study Bitcoin before you realized it couldn't be stopped?
A lot.
It took me a lot. Tens, probably into the hundreds. I don't know.
Yeah,
people will keep printing is a little bit easier. I mean, that's just kind of like getting through some monetary history and studying incentives and game theory. Like, of course, people are going to steal if it's profitable. People do whatever is profitable is another way to say that. And then people being self-interested is almost axiomatic about human nature.